Dinar Shift is on the air, and we begin tonight with a story that has sent ripples of intense interest through the global currency community. Reports have emerged from deep within the core of the U.S. financial system, indicating a truly extraordinary development concerning the exchange rates of both the Iraqi Dinar's IQD and the YAR's Vietnamese Dong as a VND. These are not public announcements or website changes, rather, they are highly specific data points reportedly appearing on the AS internal banking screens of two of America's most influential financial institutions. The mere mention of such activity in major commercial banks, particularly those with integral ties to the U.S. financial infrastructure, is enough to capture the attention of anyone tracking the potential evolution of these currencies. The narrative began to coalesce from various sources earlier this week, stemming from individuals with direct access to the proprietary data systems within these major banks. What they reported seeing defies the publicly known exchange values by a dramatic margin. For the Iraqi Dinar, internal terminals were reportedly displaying a value of IQD 53 per unit. The Vietnamese Dong, or VND, was allegedly shown with a value hovering around Rs 395 Rs. These are figures that, if confirmed and translated into an active, official exchange rate, would signify a monetary event of colossal and historic proportions, prompting a necessity for objective analysis and extreme caution across the financial world. The immediate reaction to such claims is, understandably, a mix of high-level excitement and healthy skepticism. The currency community has, over the years, witnessed numerous unconfirmed reports and fleeting data anomalies related to these two currencies. However, the current situation presents a unique wrinkle. The reports suggest a simultaneous display of these highly unusual figures across not one, but two behemoth U.S. financial institutions. This consistency, according to observers, lends a degree of weight to the discussion that previous isolated rumors may have lacked, moving the conversation from mere speculation to a detailed analysis of banking system protocols and international data synchronization. To fully grasp the significance of Chase and Wells Fargo being named in these reports, one must understand their critical function within the American and global financial architecture. These institutions are not merely local banks, they are colossal commercial entities deeply integrated into the plumbing of the financial world. They maintain direct, real-time connectivity to the U.S. Federal Reserve and the Treasury Department for the purpose of foreign currency settlement and clearance. When rate data appears on their internal, non-public terminals, it usually suggests the information is being sourced directly from or synchronized with top-tier federal or international financial data streams, even if only as part of a technical exercise. Historically, the appearance of temporary or placeholder values on internal bank screens has often been attributed to as system testing or preparatory maneuvers. Global banking networks frequently run complex simulations to ensure that their software and infrastructure are capable of processing and settling transactions at dramatically different exchange rates should policy changes ever occur. These are essentially stress tests run behind the scenes. What makes the current situation so compelling is the purported display of the same unprecedented numbers in multiple major institutions simultaneously, potentially signaling a coordinated data action rather than a simple, isolated glitch or a local branch training scenario. The numbers themselves command careful consideration purely for their magnitude. A valuation of a 53 for a single Iraqi dinar would immediately vault the currency to the undisputed top position on the world stage, surpassing the Kuwaiti dinar, which typically trades around 325. Likewise, this 395 per unit for the Vietnamese Dong represents an utterly massive appreciation from its current public rate. For a nation like Iraq, which holds enormous reserves of oil and natural gas, such resources theoretically provide the underlying economic foundation that could support a stronger currency, provided that political stability, trade agreements, and effective monetary policy are firmly in place. However, transforming a currency's value from a tiny fraction of a US dollar to tens or hundreds of dollars is a monetary move of nearly a unprecedented scale. Experts looking at this situation are divided. One school of thought suggests that these figures are almost certainly the result of an advanced controlled test environment a simulation to verify that the complex international exchange platforms are indeed ready to handle new, hyper-inflated rates if a policy decision were ever to mandate a shift. This approach views the activity as purely technical preparation, ensuring operational readiness without committing to an actual policy change. An opposing perspective, however, notes the consistent, synchronized display across high-level banking entities and views it as potential evidence of a more active plan moving into its final, pre-implementation stages. These analysts argue that while simulations are common, the high profile of the banks involved, coupled with the precision of the figures reported, may hint that the groundwork for a major financial event, one often discussed in currency circles, is nearing completion, at least from a technical standpoint. They see the data appearing on these screens as a final stage readiness check. Both Iraq and Vietnam have been engaged in multi-year strategic efforts to modernize their financial systems and enhance their standing in global finance. Baghdad, through the Central Bank of Iraq (CBI), has been working to update its core banking structure, tighten oversight, and align its compliance framework with international standards. The CBI has focused intensely on stabilizing the dinar's value against the dollar on the parallel market, integrating with international payment systems, and improving fiscal governance to combat corruption, all considered necessary steps for long-term currency credibility. Vietnam, too, has been methodically progressing on its economic journey, prioritizing deeper integration into global markets, fostering manufacturing growth, and strengthening its foreign reserves. The State Bank of Vietnam, SBV, has pushed for greater transparency and digital banking transformation, steps that position the nation as a rising economic force in Southeast Asia. Such sustained efforts by both nations to build a foundation of economic stability and compliance could potentially make them future candidates for currency reform, a fact that feeds the ongoing interest in their exchange rates. Examining Iraq's recent trajectory reveals a focused commitment to digitalizing transactions, strengthening its central bank's autonomy, and aligning its systems with global standards. These moves are crucial for improving the nation's ability to participate effectively in international trade and currency markets. The reported sightings of the unusual rates also coincide with a series of high-level diplomatic and economic visits by U.S. Treasury officials to Baghdad, adding another layer of geopolitical context and intrigue to the technical banking reports that have surfaced this week. Globally, the use of simulation tests is a standard, essential practice before any major financial system update. The aim is to verify that all components, from local terminals to international clearinghouses, can function flawlessly under new parameters. It is an exercise in preparedness. Typically, however, such test rates would be ephemeral, varying wildly, or quickly pulled from circulation. The reports suggesting that these specific, highly unusual figures for the Dinar and Dong remained visible for extended periods has particularly raised eyebrows among observers, pointing toward a persistent data link. The core question that this entire saga generates is whether this activity represents the much-discussed and anticipated as revaluation RV's moment. The term has become a perennial feature of currency discussions, signifying a theoretical, large-scale realignment of global exchange rates often tied to asset-backed valuations. The Iraqi Dinar and Vietnamese Dong are frequently cited in this context due to their traditionally suppressed values and strong underlying resources, though it remains imperative to distinguish genuine financial mechanisms from ongoing speculation. A genuine currency revaluation, if it were to ever occur, would not be a sudden, unannounced event on a few internal bank screens. It would be a highly coordinated global action, managed through official central banking channels, international monetary organizations, and public government announcements. Therefore, financial observers continue to stress the need for extreme prudence and caution. The wise course of action for any individual tracking this story is to focus solely on confirmed, official statements from recognized government or banking authorities, rather than on internal terminal anomalies, shifting the focus to Vietnam, the nation's compelling story of manufacturing growth and deep global trade partnerships is key to understanding its potential for currency adjustment over time. The State Bank of Vietnam has successfully managed an economy with consistent growth and strengthened foreign reserves, which theoretically justifies a gradual, long-term trajectory toward a stronger currency. The appearance of updated figures for the dong on U.S. terminals could be a technical reflection of the increasing importance of Vietnam's economy in international settlement systems, preparing the network for expanded trade and capital flows. The entire event underscores the EZITR's interconnectedness of modern digital banking infrastructure. A data update or adjustment, whether for testing or an actual change, in one nation's central database can ripple instantaneously across the internal terminals of partner institutions worldwide. When these ripples involve currencies like the dinar and dong, which are closely watched by a dedicated community, even routine technical maintenance can trigger intense, global speculation. This highlights the double-edged sword of digital transparency while enabling efficiency. It also dramatically amplifies the public reaction to unconfirmed data. It is also crucial to acknowledge the concept of arbiters placeholder rates within banking systems. These dummy figures, often intentionally unrealistic, are frequently used to ensure systems can handle the format volume and timing of potential future data without causing a crash. Similar temporary displays related to the dinar have occurred in the past, serving a purely technical purpose before being removed. This historical context emphasizes that the appearance of these reported figures, while intriguing due to their consistency, is not an automatic, irrefutable as proof of an active revaluations policy. The reported involvement of major U.S. institutions points back to the oversight role of the U.S. Treasury Department, which is central to managing foreign currency transactions conducted through American banks. Rate data on terminals like those at Chase and Wells Fargo is directly linked to or coordinated by Treasury, connected data streams, or the Federal Reserve's settlement systems. Recent upgrades to the financial technology infrastructure of these major banks, particularly their foreign currency management tools, could easily coincide with international coordination efforts involving countries that are strengthening financial ties with the U.S., such as Iraq and Vietnam. Despite its historical challenges, the Iraqi economy is showing measurable, tangible signs of recovery, driven by strong oil exports, new international trade agreements, and significant improvements in fiscal governance. Iraq is actively working to attract global investment across its energy, construction, and banking sectors. A currency realignment, in the long term, could well be considered part of a broader, official strategy to formally reflect this new national economic momentum and strength. The full scope of this transformation is ongoing, regardless of the immediate meaning of the internal bank screen reports. The public reaction to these reports has been highly emotive and deeply analytical in equal measure. For long-time currency followers, the sheer sight of such numbers, even on an unverified screen, can represent the culmination of years of anticipation. Financial advisors consistently maintain that the only rational response is a measured one. Monitor the verified news and avoid all decisions based on unconfirmed claims. Patience and discipline remain the most valuable assets, as any official currency adjustment would be a major, public event communicated through official government and central bank channels. Hypothetically, should the reported values of a 53 Iraqi dinar or a 395 Vietnamese dong ever become official, the global financial implications would be profound, fundamentally altering the national wealth and international standing of both countries. However, such a rapid, dramatic appreciation would require an equally massive and immediate adjustment across trade balances, foreign reserves, and international exchange mechanisms. Economists stress that any sustainable, legitimate adjustment must be part of a gradual and strategically managed economic policy, supported by fundamental trade realities and robust regulatory frameworks. In the midst of all the swirling information, transparency remains the paramount virtue. Until an official, verifiable statement is issued by the Central Bank of Iraq, the State Bank of Vietnam, or the U.S. Treasury, all circulating information from unofficial sources must be treated as preliminary data. Reliable financial coverage prioritizes verification over viral momentum. Our focus is to provide the context, analyze the mechanics, and offer a balanced perspective, never engaging in financial prediction or speculation. Looking ahead, The critical indicators to watch remain the public announcements from the national central banks, official treasury statements, and verifiable shifts in global exchange data feeds. While the presence of these highly unusual figures on major U.S. bank screens is a potent sign that the topic of currency reform is active and monitored at the highest financial levels, it also serves as a sharp reminder of how digitally interconnected and ready modern economies have become to handle future evolutions. The systems are clearly being built to adapt swiftly to new realities. The most essential takeaway remains a simple but powerful one: stay informed, not impulsive. The world of global currency exchange is inherently complex, fast-moving, and frequently subject to misunderstanding. When unexpected data surfaces, anticipation is natural, but knowledge and a cautious demeanor are the most valuable tools at hand. Whether this recent development proves to be a technical test or the genuine precursor to a major financial event, it definitively reflects a world in constant motion, where global monetary systems continue their relentless march toward modernization and ultimate readiness.